Hi everyone, today let's do a quick update on the 2025 strategies that we talked about as we were heading into the year.
Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started.
So 2025 strategies, they're saying high to discretionaries and buy to utilities. I don't think that's the right move, but let's take a look at what they have to say here. Everything was pretty solidly positive on the January, which is usually a pretty good sign for the rest of the year. You can see 5.1% for sector momentum edge, easy rider 2.9, and then momentum rider here at 3%. But let's take a look at the changes they are saying for these portfolios. When it comes to sector edge, they look at the 11 sectors and pick the strongest and allocate money towards them. We've talked about this before. Sector momentum percentage has done much better than the S&Ps over the last decade. Definitely something to look at. Find the sectors that are outperforming the best, and you can see pretty much since inception this has been the outperformer. It's been 5.1% in the last month. Like we talked about, financials doing 6.5%, communication 5.8%, and utilities 2.9%. So overall, really strong returns, and that's what they were allocated into. So financials, utilities, communication, and overall, it was the best performer. When it comes to the next month here, they are swapping out utilities for discretionaries. I don't agree with that. I just don't think discretionaries is in a good place. We've been talking about discretionaries rolling over. We'll see. We'll see if it has a different play here. We'll look at discretionaries later in the video, but for February, they're putting in discretionaries. I think that's probably a mistake. And then easy rider portfolio, 60% global stocks, 20% bonds, 10% commodities, and some gold and Bitcoin in there as well. Overall, good performer here as well. I've been talking about bonds. I am much heavier bonds right now. I just don't think stocks are in a good place, and we'll talk about it on the long time frame charts here today. But overall, pretty good mix. Trying to stay a little bit away from the stocks, at least for now. They also have a lot of international stocks and total stock market funds. I don't know if that's the best place to be as well. Does give you a little bit of diversity, but not super great, in my opinion, for right now in this current condition. And really what this is pointing to is that you can have similar returns to the overall stock market with much less drawdowns. Makes sense with the bond market and getting those yields, commodities also tending to outperform because they still have that true value even as equities begin to fall. And again, I do think that's an opportunity for sure. Overall, did underperform just a little bit, but really it's designed to prevent some of those bigger drawdowns, and then you can kind of reallocate from there. And then finally here, the momentum portfolio, again, continuing to outperform global stocks. Probably not the same if you're going to compare it to the S&Ps, but when it comes to global stocks, it did outperform, so that's still pretty good. 3% outperforming just slightly, and you can see the breakdowns here in terms of weightings. 24% stocks, 24% gold, 48% bond market. Definitely something that I am doing right now. I think I'm even heavier than that in the bond market right now, and then a little bit towards that Bitcoin. Momentum rider seems to be the most comparable to my portfolio. And then looking at the changes for this month, pretty crazy changes, honestly. And I definitely don't agree with all of them. You can see 24% US stocks, 24% developing markets, and 24% emerging markets. So they're flipping that bonds out 48%. And buying developing and emerging markets. I don't know. I'm not sure I fully agree with that. 24% gold, obviously much higher weight than me. I don't really own any gold outright. I do trade it occasionally, but that's about as far as I go. And then Bitcoin, definitely not in my portfolio. Not a big crypto guy. I know a lot of people are, but in terms of investing, it's just not for me, especially at the high valuations we're currently at, in my opinion. Quick look at fear and greed. We finished the week at a 39 from a 40, so markets continue to be pretty sideways choppy. You can see it here. We did go a little higher, we went a little lower, and we are still here in this kind of same trading range. It is dipping a little bit lower with the price action that we've been seeing. Strength continues to be in fear despite gaining a little bit this week. Breadth moving a little bit lower. We talked about it. Looks concerning. We'll look at it later, of course. Put call ratio still in fear, rolling down just a little bit there. Volatility spiking as we've been talking about all week. Safe haven demand, fear as the bond market starts to outperform a little bit. Equities rolling over, and then junk bonds have neutralized as we have seen. Government bonds start to take a little bit of an upswing. Investment grade bonds doing a little bit better and now we're neutral between the spread. Moving over to the AAII survey, I think this is definitely concerning to see the bulls getting squeezed here. This was the expectation. We did kind of expect this to stair step down here while the bears did stair step up. They are at a pretty low level here for the Thursday, and that was ahead of the selling that we saw on the Friday. But when you see big selling with big momentum on the sentiment, to me that means I think markets are actually going to send it lower here, especially considering that we did hit those peak levels on the Friday and then sell immediately off of that. Typically, these big metrics are a contrarian metric for me, but when we hit these key levels and we see markets flip to bearish, I think we're just going to see a pretty consistent swing here on the bear side. We're not super low on bulls yet, so 25, you can see here mid-January, that was a pretty low level, and that did end up producing a little bit of a bounce, but I think we're going to see at least one more step down on this, so at least one more week of selling in my opinion. Seasonally, the fun is kind of over here. We talked about it the first week. You have a fair amount of potential for bullishness. After that, it's kind of sideways choppy for the second week. And then the last 2 weeks of the month are pretty bearish all the way up until the last day of the month. And I believe this continues a little bit into the March area. So sideways choppy here to potentially bearish. And then moving over to the calendar, you can see a little bit of bullishness for Monday. I don't really think that's going to follow through. It is President's Day weekend, or week, I should say. It's up 10 of the last 14, pretty good numbers there. But realistically, I think this is going to be sideways choppy to potentially bearish. We do have CPI on the Wednesday and PPI on the Thursday, and then a little bit of economic data, retail sales there on the Friday. Day before President's Day, up 10 of the last 14. So that's a pretty good stat there for the Friday. Maybe we see some selling into the Friday and then a slight bounce there. First day of options expiration the following week is pretty good numbers, 21 out of 31. So a little bit better than the overall up percentage. You can see 7 of the last 12 for up weeks post President's Day. Remember, President's Day is closed next week, and then it's bearish, bearish, bearish all the way into expiration day, and then bearish the following week. One slight bull day, but pretty bearish across the board those last 2 weeks of the month. Quick look at earnings. There is a little bit of earnings left. You have McDonald's here for the Monday, fairly interesting. On semiconductor, First Energy, fairly interesting. Coca-Cola, of course. Gilead Welltower for you real estate guys out there. I definitely have been buying real estate. I've made some adjustments. I might actually do a video on that because I have made a fair amount of adjustments there. And then Supermicro, let me know if you want me to do that in the comments. Those are my long hold portfolios. Supermicro here as well for the Thursday, for the Tuesday here, and then for the Wednesday. Cisco, fairly interesting. CME Group. CVS, want to see if they've turned it around at all. They've been a bit of a dumpster fire recently. Palo Alto for the Thursday. John Deere, they're kind of a bellwether. Want to see how they're doing. Datadog, one of those high flyers. And then Federal Realty, company I like quite a bit. It's definitely in the real estate ETFs that I own. And then Moderna here for the Friday, pretty much wrapping up the earnings season. Almost all the heavy hitters are in, but there are a few left. Also, Global Payments, forgot to mention them. Definitely want to see how they're doing. Moving over to the economic calendar, you got Jerome Powell talking on Tuesday, nothing there for the Monday. And then you got CPI data Wednesday. That could be interesting. It is expected to step up a little bit on the core month over month. Core year over year, no forecast. Want to see that continue to roll down. And then you can see headline CPI month over month expected to step down a little bit. So they're kind of normalizing here at 0.7. Fed Powell speaking again on the Wednesday at 10 o'clock. Definitely want to see what he's been saying. And then 10-year note auction. Want to see how that goes. Really, I want to see that come down a little bit into the 4.5 range. That should allow markets to stabilize a little bit, but I'm not sure it's going to happen. If this comes in a little bit hot, that should push markets a little bit lower. So something to watch for there. And then you got PPI for the Thursday session, initial jobless claims, 30-year bond auction in there as well. Very, very close to the 5 number. Interesting there. And then for the Friday, core and headline retail sales, as well as the Atlanta Fed GDP numbers, continuing to watch those. The previous one was not great. Want to see that go a little bit higher. If it could get above the 3 level, that would be interesting, and I think a little bit bullish for markets. Would it immediately have a major impact? No, not on the data, but if this continues to kind of drift a little higher and then it comes through on the GDP numbers, the actual GDP numbers, then it would be bullish. And then moving over here to Max Payne, you can see stock price right around 600, Max Payne 596. Put walls here, 590, 585. So absolutely not what you would want to see. And you can see big call walls here at 620. Total options, 550,000 or so. Put call ratio very, very low at a 1.68 on this metric. So everything says here to me that this should be able to drive. This will allow markets to fall potentially as far as 2% lower. Are we going to close below 590? Probably not, but could we get to the 590 and kind of test this put wall? I think so. So keep this in mind. This is definitely allowing for a lot of bearish room. Could it rally? Sure. 605, about 1% or so, maybe as high as 610. Realistically, I don't think so. But based off the Friday, I think we're going to get a bearish swing. We've been talking about that. And I do think there's plenty of room here on the max pain numbers to allow it to fall as much as 2% this week. And then looking at the weekly chart here, starting off with the SPY, you can see it was down about 0.25%. We touched the trend line 2 weeks in a row. We rejected from there 2 weeks in a row. Momentum stepping to bearish. First time we've seen that in 3 weeks. Absolutely not good. In terms of a formation, definitely looks like a double top. A couple of wick rejections at that previous high here in December, and we still have not gotten higher than that level. Medium term, again, looks like everything else, right? We're waiting for these trends to catch up. They have caught up. We almost touched the 21 EMA at 59.16. RSI kicking back below that SMA after the retest 2 weeks ago, and now it still continues to decline. Even with prices staying relatively stable, strength looking quite a bit weaker. If this trend line breaks here, or we at least move down to it, that gives you about 1.25, 1.33% potential. And then if we do get the breakthrough there, that's going to give you the next trend line, which is down around 3.5, maybe 3 2/3, somewhere in that range, which would actually take you back to the relative lows here that we are still working off of. So pretty much in line with what we talked about on the Friday video. We said this 590 area on the SPY charts is definitely going to be in play. And looking at that daily chart here, you can see right in here, somewhere between 580 and 590 is this kind of bottoming consolidation. 590 was this zone here. That was the low from the Monday session where we then rallied up the next 3 days before we had that big sell on Friday. Overall though, I think that we're probably going to go a little bit lower here, touch the trend, then we have this lower trend here. Like I mentioned, go ahead and extend that out. Gives you a target somewhere in here around 584, and then throwing my levels on there, you can see 599 is the one we've been watching. If that breaks, that takes you right to the low here at that 591 area, and then 585 right in the middle of this consolidation low, and then the low for me would be 579. So I do think there is a really strong potential. We see 1.5 to here, potentially as much as 3.5. Probably not next week, but over the next 2 weeks, maybe 3. And then looking at the Tasty charts here just for a moment, you can see momentum bearish. This fits with everything else we've been talking about. Trailing stop still is bullish here at 565. That is on the weekly chart. On the daily chart, we are actually still bullish. We did get back to bullish mid-January as well. You can see it here. We're still in that bullish conditions. My guess is we're going to test that trailing stop this week. That is at 589.35. You can see we almost touched it on that Monday session. My guess is we're going to get back into that zone. That also takes you to the 89 EMA, which is right in here as well at 588.71. So this is the zone. This would be my target here for the week, and I do think we're going to get there. And then looking at the NASDAQ here, you can see similar thesis, sideways choppy action for a couple of weeks in a row. Almost 3 months at this point. Beginning of December, we got here. We're still here mid-February. We're right at these trends. We tested this one 2 weeks in a row, rejected from it both weeks. Similar thesis to the SPY charts. I think we're going to get below this trend here this week. And then you got the 21 EMA on the weekly sitting at 20,883. It'll step up a little bit more next week, 20,955, somewhere in there. Either way, though, momentum bearish, RSI bearish. Everything says this is still a topping pattern for me. Every time we've done this where we had kind of a pullback in time here, we eventually rallied out of it and kind of continued on, especially after this kind of a time frame. So we got here in June, and by the time it was September, we were starting to push out of there and make some higher highs. So if it's going to do it, it really has to do it now. Otherwise, the clock is ticking, and I think we're going to start to see those bigger rolls to the downside. And if we do get that ultimate move here, I think there's potential for an 8% move. I think that's definitely within the cards over the next couple weeks to months. That's more of a medium thesis for me. But in the short term, I do think more bearishness to come. And then looking at the triple Qs here, you can see the consolidation of EMAs and SMAs in that 518 area. My level 519.50. Absolutely think we're going to get there, especially with the after hours price action. We're already a little bit lower than we were at the market close. You can see momentum, RSI, everything says that we are going a little bit lower. Volume coming in off of this sell, clear triple top here. Everything says we should go a little lower. And both times we got into this range here between 510 and 511, which I think is probably what we're going to get. And that would be at least another 2 to 2.33% down from current price. And then you got the trend down here as another potential in-play marker. That would be about 3.33% lower. And then looking at the Tasty charts, you can see we hit the second ATR band here, pulling back, didn't quite get to that ATR band. You can see the bands just barely starting to roll to a little bit flatter trajectory there. And then looking at the daily chart, not the same as the SPY here. You can see bearish conditions across the board. We've been in bearish conditions. The trailing stop was 536.68, and it still is. We haven't gotten to that level. We got very, very close here in January. So far, not so close in February. Momentum rolling down, volume on the selling. And again, I think we're probably going to get back into these kind of low ranges here, 511, 510, somewhere in there. And then if we bust through those levels, you have that 89 EMA, 509.16. And you can also see on the daily chart just how flat these ATR bands are. Absolutely sideways choppy action. They're actually curling in a little bit. So the range is starting to condense. You can see all of the volume here, big selling volume, big selling volume. We did get a little bit of a spike up here, consolidation after the volume spike on the 20th. And then you can see selling volume here, 17th, sideways choppy, and then volume selling here. Obviously that was the DeepSeek shocker where we got the huge gap down, which was big selling. So overall for me, I think this looks like a big profit take after a massive rally. And I do think we're going to see substantial pullbacks. Is this the top? I think there is a fair amount of evidence that it could be a medium to long-term top. Then moving over to the Russell here, you can see same thesis as everything else. We've had multiple wicks here on the weekly chart into the same region, and this was another iteration of that. We've gone lower each week. We wicked back up to the same level somewhere in here, 229 to 230, and then we continue to reject back into this zone down here. I think that's probably where we're headed. So you got some trend support in here, 222, 223, somewhere in there. And then if this zone breaks, then I think we're probably headed to the 55 EMA, which is about another 3.5% lower from there. And from current price, that would take you about another 5% lower. So I think the risk is to the downside. We didn't see a step to bearish on momentum. RSI still showing weakness, still well below the SMA. It is just barely at the 50 lines at a 52.5. So you could argue that's a little bit bullish, but I think that's a bit of a stretch in my opinion. And then looking at that daily chart here, you can see big wicks, same zone, 55 EMA on the daily continues to be resistance. We got above it for just one day there on the Wednesday when it's slightly higher and then immediately gave it all back. We're at the level 226.02, closed below it just barely by 2 cents. For me, I think we're headed a little bit lower in here. 21 EMA, probably going to break 144 EMA is most likely the target, at least in the very short term. That would be 222.77. And then, like I said, trend support just below that around the 222 area. And then looking at that momentum, you can see stepping down towards bearish. RSI breaking back below the SMA, expecting this to go a little bit lower. So like I said, short term, 1.5% to 2% probably. And then if that breaks down, you got the 200 at 3 3/4. My level in there to 18.13. So that's where we came to here. And then we got the bounce. It's absolutely in play, in my opinion. Moving over to the Russell here on the Tasty charts, you can see we're right at that 8 EMA, continues to be resistance on the weekly chart. That is not what you want to see. That's a bearish condition. So you're coming into that 8 zone. We've tested it multiple weeks. And similarly, we tested it again this week and came up short. So that was sitting at 226.12. We closed below it at 225.96 here based on the Tasty charts. So just a little bit lower of a close. Interesting to see just some variation there. But either way, resistance. The ATR bands are a little bit up and to the right still for the Russell, a little bit more than we saw on the NASDAQ. Interesting there. But looking at the daily chart, still slightly sloping higher, you could argue. 144 224 EMA on the daily chart sitting there. 221.73 seems like a good target. That's where we came to on that Monday session, touched that level, and immediately bounced back into this consolidation range. If it breaks the low of this consolidation range, which right now is around that 225 area, then I think we're headed right back into that zone, 221.73. Momentum stepping to bearish. Volume, spike down in volume on the Friday, just a tiny bit of volume on that. I would expect that volume to kind of ramp into the selling just a little bit. We did see a lot of buys come in here, so you do have to respect it. You can see big volume here at the bottom of this price range, consolidation, and then we did get just a little bit of an upswing after that 3 days of buying in that price range here. Did end up going slightly lower, but then we retraced. So you could argue this is a little bit of buying in here. It could be fairly well defended if we got back into that range between 219 and 220. Moving over to the Dow, pretty much the same thesis as everything else. You can see a nice top here. Wicks over the last 2 weeks to the same level. Rejection this week down 0.5%. Momentum hasn't gone with it yet, but RSI rejecting from the SMA back below it. Everything says a little bit bearish here. Again, looks like a very clean topping pattern. Cut well below the 21 EMA. We got back above it. Lower high setup. Everything says this should go a little bit lower. And if we do get that lower low breakdown, you're looking at probably 8 to 8.5% potential into here. 404 would be the target, at least in the short term. You got some trend support in here for 10, my level for 12. So I think that's probably where we're headed, at least to start. Does it get there all in 1 week? Probably not. You can see it took basically 6 weeks to get there the first time. I think we're probably going to do a similar move. Sometimes these second moves can be a little bit more aggressive, but we've already had the down move. We've already had the retest. This is usually where things get pretty exciting in one direction. Moving over to the equal weighted S&Ps, just to kind of give you that same thesis here. High, lower high setup with the low looking for a lower low at this point. Still got some trend support, still got a level 179.94, but once these start to go, I think we're going to head down to this 55 EMA, which gives you about 4 to almost 5% lower. My level would be 171.51. That'll probably step up here over the next week. Volume, big selling volume on both of these. Everything for me says this is set to go lower, and I think we're starting to see a change in structure. It's not impossible that we start to see this kind of recover a little bit. We did have a high here with the lower high here, and then it kind of grinded it out in this zone, but seems like we're already below the 21 EMA versus where we are now. We're right in this zone. It just doesn't look like we have the same strength. Maybe if 177.25 continues to hold, we kind of chop sideways similar to this price action. But for right now, I think this is going to go lower here. I think we're potentially looking at least a double bottom, maybe even a lower low. Moving over to the ratios, looking at SPY Russell and the NASDAQ SPY, you can see sideways consolidation still hanging out in the same kind of region. SPY and the Russell pretty much evenly matched here over the past couple of weeks. And then you got a little bit of NASDAQ outperformance this week. Interesting to see that. So the NASDAQ was the best of the group. Momentum on this fading a little bit. Interesting. We're above the level 355. We were wondering if we could hold that. We dipped below it. We're back above it here. Structurally, pretty interesting. And extending out that trend line here, marking the bottom on that 22 April week, you can see it pretty much marks this bottom here, the top, and then another wick to that same trend line. So as long as we're below it, probably going to show a little bit of rejection from there. Maybe the NASDAQ underperforms a little bit this week. But overall, we haven't seen really major movement on any of the indices relative to each other. Got into this region January of last year, and we're basically flat here. So NASDAQ SPY pretty flat over the last year. And then June until current, you can see SPY Russell relatively flat. That was not the case for a long time. For a long time, we were seeing really strong SPY outperformance here. And then you can see it during this period as well, really powerful NASDAQ outperformance. But the market leaders are not leading us higher. And again, for me, that's a little bit of a topping pattern, bearish indicator potentially, where we don't have a market leader. We don't have something that's going higher consistently, which is not encouraging these other companies to start to kind of follow along, which is supplementary to my bearish thesis. And then moving over here to the SPY divided by the M2 money supply, you can see we're still in the same range, 27.25 up to that 28.50 area. Wicks to the trend. So far we've sold. Momentum hasn't quite stepped to bearish. RSI selling. Hasn't broken the level yet. We did dip below it here briefly. 55 EMA down at 26.14. Is this the top that takes us all the way back down to the 22 area? If that happens, that would take us all the way here. That'd be 20% lower. Is it in the cards? I don't think it's impossible. It's been a massive run. We haven't had any really major pullbacks. We had a smaller one here of around 10%, but it's been a while. Markets are clearly slowing. You can obviously see the pattern in it here, showing rejection, breaking below the trends. Is it going to do it? It's not impossible. And the longer we kind of consolidate and roll over, the more likely I think that it is. Moving over to the Mag 7, you can see it was down just over 2% inside candle. Same thesis as everything else. You can see the Mag 7 is not leading us higher. It's been sideways consolidative for the same amount as markets, and we are still here down 2%. Support is still this 315 area. Got VWAP there. If it breaks through this zone, 21 EMA I think is in play. That would be at 303. And that would take us down to around the 5.5% lower area, 305.25, somewhere in this zone here. Again, I think that's possible. You can see the momentum continues to fade. RSI continues to fade and break down here. We are at a lower RSI read than we were on this previous dip low, and we have a much higher price here. So I think we are going to go quite a bit lower. I do think this is going to sell. Again, is it going to go 20% lower? Probably not in the short term, but I think 5% is in play. Moving over to Apple and Microsoft. Both of these had pretty rough weeks. Apple was down 3.5%. Momentum bearish, RSI bearish. Still got some trend support in here. Still got a level, 224.36. We're in the same kind of trading range here. Is it going to be able to hold support in here? I don't know. We tested it once. We caught a really strong bounce. Everything seems to be selling. Is it going to push through here to the 55 EMA? I think that's certainly a possibility, especially with these indicators showing quite a bit of weakness. And then looking at Microsoft, this looks a lot worse here in my opinion. You can see super long consolidation, super long distribution in my opinion. Definitely tried to break out, couldn't do it. Multiple touch here. Now we're selling down 1.28% after the terrible week the previous, 6.5% lower. Closed pretty much on the low at 409.75. I think this is going to go down here to the 394.22 level. I've been saying it forever, it feels like. But if it's going to do it, it's probably going to do it here in the next week or two. We've closed below this level. We're well below all the EMAs and SMAs on the short time frames. Your next dynamic support is nowhere to be seen, all the way down here at 340. If we got to move like that, that's 16, almost 17% lower. Can it do it? It's not impossible, but in the short term, I think we're going to head lower to that 394 area. Moving over to Tesla and NVIDIA. Tesla sold over 10.5%. Momentum bearish, RSI bearish. Everything's broken here, well below these lows with a clear topping pattern. 21 EMA is your next support at 339.42. So short term, that's about another 5.5% lower. You got some trend support just below that, 326 or so. Huge volume. Tesla had a bunch of bad news. Makes sense that it's starting to sell and fracture this consolidation pattern that we've had. And this up move, it was absolutely massive from the 216s to the 450s. We got as high as 488.50. Now we're starting to retrace some of that. NVIDIA actually had a great week, 8.14% to the upside. 130.35 is still your resistance, held that 55 EMA. This is probably going to do the same thing as Microsoft. We're just much earlier in its kind of evolution here. We got the first touch of the 55 EMA. Took a while for that to kind of consolidate and grind sideways here, potentially all the way out into the June-July timeframe. Remember, Microsoft took a year. This could take a long time as well. Also, NVIDIA is kind of in a better position. It's quite a unique company, so maybe they can hold up amidst all of the selling, but my guess is they will still experience some selling along with everything else. Moving over to Amazon and Alphabet. These did okay, 3.5% and 9% down on Alphabet. They obviously had terrible earnings. We talked about it while it happened, but Amazon held in there pretty well considering. They still said they were going to spend a bunch of money. They still said that they were doing pretty much everything. You can see the huge volume on their earnings, but structurally, we held kind of in this zone versus Alphabet, which broke below everything here. Came right to my level, 185.22. That's why it's super important to have those on the charts. The low of the week was 185.10. Touched the level, caught a little bit of support, bounced to 187.14. But momentum, very bearish. RSI, very bearish. Everything says this should continue lower. Big catalyst of earnings. Amazon might hold these trends. Maybe it hangs in there a little better, but I would stay away from Alphabet, at least in the short term. think this is probably going at least to the 21 EMA, which is about another 2 to maybe 3% lower, and then you got the level there, nearly 4% lower at 174.42. Moving over to Meta and Broadcom real quick, you can see Meta actually had a really good week, 3.68% to the upside. Broadcom also showing some gains at 1.63%, so not everything is broken. You can see Broadcom actually showing some strength, hitting the trend, pulled back slightly, still holding the structure here. Momentum's not great on Broadcom, but definitely very strong here on Meta, looking for a touch of this trend in the 750 to 760 area, probably right in that 760 area here. So Meta actually looks okay. Is it going to be a victim of just overall sell everything? Potentially, but out of the group, the Mag 7, Meta looks very good. Moving over to staples and discretionaries. Staples showing a lot of strength, up about 0.5%, throwing wicks to VWAP. There is still some overhead resistance in here, but looking at discretionaries, selling 2.84, already below VWAP, 21 EMA there at 216.77. I think there's definitely a potential for a touch of that, at least to the previous low. That's about 2.75% lower. You can see 21 EMA closer to that 3 to 3.5 range, and then my level 215. So momentum bearish, RSI bearish, everything looks like a topping pattern. This is the weekly chart. These weekly patterns can take a while to culminate, but if it's going to do it, it seems like this is the zone where it should be getting ready to go here. 1 to 2 more weeks. Think we're probably going to see some major sells. Moving over to breadth, 20 and 50 day breadth, selling pressure here as well. You can see consolidation only took 2 weeks, and now we're falling here a little bit. Momentum stepping to bearish. And then looking at the 50 day, same thesis here. We went much lower, bigger pullback on the 50 day. We did recoup a lot of that. It was only down 2.35%, but again, this looks like a high, lower high, lower high. And off of this structure, you should expect at least a move to a higher low, somewhere in here, maybe 23 to 26 in this zone between here. But if we double bottom, that could take you to the 15s. This can actually go a little bit lower into the 10s. We've seen it as low as the 2s. Anytime we get into this zone, that is a huge opportunity. You can see here the low was 0.79. When you see those kind of indicators, pretty much buy everything as fast as you can. That is the bottom of markets. But for where we're at right now, you can see lower high setup. I would expect more selling on breadth. The momentum hasn't gone with it yet on the 50 day on the weekly chart, but if we get another sideways step, I would expect it to go next week. Moving over to 200-day breadth, you can see it was down 4%. We did have a big wick here. We gave it all back. We couldn't regain all of that, and then we sold a little bit more into the Friday. We're at the 50 line, so we're not completely broken, but my guess is this will probably dip below the 50 line, and then we're going to go into negative breadth, which is not usually a great time. So you can see here, this was the January of 22 move. We had really consistently lower lows, and it does look really close here. So you can see initial dips here, couple of wicks, lower highs, and then this kind of starts to trail off. You can see here kind of trailing off, lower high, starting to see some of those major dips. Is it going to waterfall off? Obviously we don't know yet, but the structure does look very similar, and I would expect at least a little bit of lower lows here over the next couple weeks. Moving over to the dollar here. The dollar was actually slightly negative on the week, but we're still chopping in this zone. Momentum continues to fade. RSI continues to fade. It seems like the dollar is probably going to sell here a little bit, which could give equities a little bit of strength, but either way, everything seems to look pretty weak with a high, lower high here, big wick rejection, closing negative on the week. CPI is obviously going to affect this pretty strong next week. If we get a really soft CPI number, maybe that props up markets a little bit, but on a technical basis, this does look a little bit weak. Moving over to bonds here, you can see J&K not so great, down about 0.5%, but really kind of in the same trading range we've been in. Nothing changing. 55 still your support, 200 still your resistance. Momentum a little bit bearish, RSI a little bit bearish, but then looking at TLT here, you can see nice week there, 1.72%. We said the low was kind of in around this 85.90 level. We got back above it after testing it first week of January, and now we've had really strong moves. You can see momentum swinging to bullish, RSI bullish, volume bullish. Everything here says we've kind of set a bottom, and I do think this is going to continue to rally here, probably to the 92 area. Moving over to volatility, the VIX was slightly positive on the week. We threw wicks to support. We ended up closing a little bit bullish. Momentum stepping to bullish, RSI stepping to bullish a little bit on the weekly chart. The daily doesn't look as good, but the weekly does, and the weekly looks like we are continuing to be a little bit elevated, and I think this is probably going to go a little bit higher here over the next week. Maybe we throw a wick up to this trend here. Let's go ahead and extend that out. If we do get another retest of that trend in here, that would take you up to the 22.5, 22, almost 23 area. So if we do get a swing like that, obviously markets will be going much, much lower, and I do think we are set for a move like that. And then finishing up with my accounts, I did really well on the week. I think I profited about $1,000 on the week. The NASDAQ was up about 0.1, so I outperformed markets this week. You like to see it. I missed that down move on Friday, so that was great. I was able to hold most of my gains, and I was able to get positive on the year, so you like to see that. Overall, not a great start to the year, but we're starting to smooth it out here. You like to see it. In terms of positions, Qs, 532s, sold those. They're almost at 50% profit. This continued to sell after hours, more than $1 after hours of selling. So everything looks bearish. I think we're probably going to open up a little bit bearish this evening. We'll see how it goes with the S&P futures, but for me, markets look pretty rough, and I would be cautious if you're trying to trade to the bull side really at all, especially in the short term. Let me know down in the comment section what you thought of the markets. What do you think of the strategies? Does it affect your portfolio? Are you going to make any adjustments based on what you saw or the Finamized portfolios? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.